Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. I spoke about the main pattern here 5 weeks ago when I said, and I quote, "What seems to evolve from this move lower is a fairly acute, bright pink, bearish Andrews pitchfork. The price is now close to the steeply declining bright pink middle time below, currently at 15,810. End of quote. This situation, whilst on the whole is still true, in that prices are just about within the bright pink, well, heading out of it actually, but just been within the bright pink early May to early June bearish pitchfork, is not true about the middle time, as prices for the last 2 weeks have hit a stone wall below at the 16,200 zone and travelled sideways, enough that today the market is testing the bright pink upper time, currently at 16,795, with a view to breaking out of this bright pink bearish pitchfork. I should point out that there is no possibility of finessing this acutely bearish Andrews pitchfork to a shallower bearish shift pitchfork, so once it is broken, that will be it. Thus, for the overall state of the market, I added 3 weeks ago, and I quote, "We now need to start looking at 3 separate but fairly close together supports below. The slowly rising gold long moving average, currently 16,935, the 50% Fibonacci line of the 25 to 26 move at 16,935, same level at the moment, and the bright red neckline extension, currently at 16,565 of the July to November 2024 head and shoulders top. Of these 3, I suspect the bright red neckline might be the more useful support." End of quote. Where we easily reached these supports and 2 weeks ago bypassed them lower, but not far enough that prices have maintained still a touching relationship with them, especially the bright red neckline extension. Enough that we are today back above the bright red neckline, though still below the gold long moving average, and the 50% Fibonacci line, though not too far below it. So what now? Well, I asked this same question last week and the week before, and I gave the following response back then, and I quote, "We could look at the whole mid-December 25 to date actions, a very large double top pattern, Eve and Eve type. If this becomes true, then the opportunities on the downside are quite considerable. The bright red neckline previously mentioned could also act as a neckline for the very large head and shoulders, double top, in which case we have breached it today and on the verge of breaking it, thereby giving a primary target X1 down in the 15,155 zone and a secondary harder to reach target X2 down at the bottom of my daily chart at 13,305. I've been a bit presumptuous with labeling them as targets as we haven't fully confirmed the patterns yet, but I suspect if I left it too long, it may have been too late." End of quote. These points still stand today, though they are being tested right now, and quite seriously. I would look to any consolidation over the combined gold long moving average and 50% Fibonacci line at 16,935 to be directly opposite to these possibilities and put those targets below on notice of retirement. But for now, they still stand tall, if only just. LME 3-month zinc. We're still here on this daily chart for a ninth consecutive week, still within the same big old pattern. And it's a big one, plus a more recent smaller pattern and a newer developing one, which looks really interesting. The big old pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially the middle time, which is currently at 35.66, which the market has recently been cuddling, and which has prices today a little above. Then there is the more recent second pattern, the dark blue April 25 to March 26 bullish Andrews pitchfork. The market a little below the slightly more acutely rising dark blue middle time, currently at 36.36. Now, there was also another pattern unhighlighted that had been completed by breaking lower below the lower bullish channel line of the April to late June bull channel. This is quite a wide broken bull channel, and we only stabilized below it 3 weeks. Nevertheless, as I said 3 weeks ago, and I quote, it does give us possible targets below the primary target X down in the 34.73 zone, arguably a target which was reached 2 weeks ago, but I'm going to still keep it open as that was a breach lower rather than a break lower, along with a secondary harder to reach target X1 down in the 33.58 zone, in between two important 50% Fibonacci lines. End of quote. Well, we reached target X and came close to target X1 3 weeks ago. It wasn't for one thing, and that's the third newer and developing pattern I mentioned at the start. You see, the action since early May today initially set up the opportunity for a triple top, if a somewhat ragged one, with aspects of a head and shoulders top about it. This pattern depended on one thing, and that was a confirmed break below the 34.40 zone, which so far hasn't happened, as prices made only one clear close under it and one on it. Plus, the mauve medium moving average, currently 34.17, stepped in as a support, knocking prices higher with an unusual daily key reversal up 3 Fridays ago. However, that was not the only news. You see, this original bull channel, which became a triple top over May and June, has morphed yet again into a bright green, descending, expanding wedge pattern, currently 33.28 to 36.31. This pattern, which 3 weeks ago gave support to the market, has late last week provided resistance, which is why it's so important. Additionally, it already had the requisite number of touches per side, so I would watch it very carefully for which way the market breaks out of this pattern, upwards or downwards, though we are closer to upwards right now. However, as I said last week, and I quote, be especially cautious about false breaks in either direction. Like I said earlier, all very interesting. End of quote. LME 3-month tin. In the big picture, the market here since March has been moving up from the very shallow bright red middle time below, which is currently 41.540, up to the very shallow bright red upper time above, currently at 58.960. And they're both of the one big old pattern here, still even now, dominating this market. And that's the bright red, shallow, big old 2020 to 2022 bullish shift pitchfork. A pitchfork that is in operation, still in operation 4 years after it was created. Most recently, the market has seen the possible creation of an early May to date head and shoulders top. A bright pink neckline, currently at 51.005, which 3 weeks ago we were on the verge of breaking lower. But 2 weeks ago, we moved back up away from doing so, and the last 2 weeks even higher, such that I am considering whether the head and shoulders pattern may be a continuation pattern rather than a topping pattern, or maybe even something else. Nevertheless, 3 weeks ago, I said the following, and I quote, I feel obliged to set out possibilities, not targets, you understand, just possibilities, as we haven't confirmed the break lower as yet. I would rather have some numbers out there in case we do see a true break lower in between my commentaries. Thus, a primary possibility would be down in the 47.310 zone, a secondary harder to reach possibility down in the 43.660 zone. End of quote. Right now, these possibilities are very distant possibilities, and I would likely go beyond that, beyond what I said last week when I said, and I quote, I would treat them cautiously as such, and may indeed look to retire them completely. This ties in with an item I discussed 11 weeks ago when I spoke about a piece of congestion to become very relevant in mid-May, mid-June, and again over the last 2 weeks. And I quote, I would look closely at the 2022 high at 51.005. This may not look that great at congestion at first glance, but it was instrumental in making the center of the double bottom in mid-February, and would thus not ignore it. We also have some Fibonacci levels for the whole of the 2026 move at 47.595, 49.775, and 51.960. End of quote. These levels, especially the 51.005, have become very important in recent days as supports, and thus we have the makings of some layered support below, starting from 51.005 and heading lower, whilst above, well, we did have the green short medium moving average currently at 53.150, but we seem to be overcoming that right now. However, we still do have all the congestion from May and June of a head and shoulders pattern mainly above us, but a pattern that seemingly has not been happy with being a head and shoulder top and may have aspirations into possibly being a head and shoulders continuation pattern. So caution. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.